Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Riven stock. What is going on with this? Should you buy it? Should you sell it? I hope you guys enjoy it. If you have any questions, ask them down in the comments. So what's going on with Riven? So you can see they had their IPO. This is really allowing the public to buy in and purchase shares and invest into this company. Now, when they did this, the stock literally went up over about 23% in the matter of a day and a half. And then the stock continued to go up, had a little bit of a sluggish day, and then just started rallying up. And since the IPO date, this thing has gone up right at about 55%. So literally, if you'd have just bought this stock 4 days ago, held it till now, you're up 55%. So on average, just to put this in context, the S&P 500, which is one of the most sought after investments out there, that gets an annual return of right at about 9.8%. Over the past 50 years, 90 years, it has that annual rate of return. So really, in the past 4 days, this has times 5 the S&P 500 over the course of a year in 4 days. So obviously, with that being said, there is so much hype, so much momentum among the stock. And what's my opinion? Should you buy it? Should you sell it? What should you do? So at the end of the day, you have to understand Riven, right? So Riven plans on selling a truck that's supposed to compete with the Cybertruck and the Ford Lightning. It's really supposed to be more of an off-grid automotive. That's going to be kind of their niche. And I think that's fantastic just because of the overall, we've had so much growth in that sector in general. There's a lot of, camping and stuff like that. And that's where they're going to thrive. But overall, you have to go down to the fundamentals, okay? So this company plans on raising $10 billion. And that is so much money that for a company that doesn't bring in any money, right? They made under $1 million last year, which is crazy because you have to understand that this company's right now is worth right at about $65 billion. $65 billion. And to put that in context, when Tesla first started, they went public back in 2010, and they had a valuation of less than $2 billion. And over the course of 10 years, they were able to raise, over the amount of $65 billion. It took them that long, and this company came out and did it. And the company makes no money. So at the end of the day, this is going to be more of a speculative investment. For sure, this is going to be more of a higher risk. Should you buy it right now? I think a good strategy for everyone would be dollar cost averaging. Honestly, I've said it. I said it when Riven was down in here. I've said it when it was in here. But really what it is, it's a fantastic way to invest in growth stocks because if Riven continues to go up, that's fine because you already have shares and you're still making money. But the beauty of it is when it falls down or sells off, because it's just a matter of time before it does. Every IPO sells off. No stock just goes up forever. So anytime it sells off, all you do is you just continue your investment. You continue buying once a week, once a month. And what that does is it sets a foundation and you get a good average price for those shares. So if we pull up any stock, like if we pull up another beast, Tesla, so you can see beautiful dollar cost averaging, boom, boom. And all these dips, you're just buying. So you're still making money, but you're getting a good average share. And now you see this massive sell-off. I'm continuing my investment. Just because the stock sells off doesn't mean I should get shaken out. So I am continuing my investment, using the volatility of Tesla to my advantage. So if we go ahead and we look at Riven, you can see that all these sell-offs should be a little bit of an opportunity. We haven't had a major one just yet. I think we'll probably get a sell-off easily back down to about 130, 120. Right in this zone is probably when we'll find some somewhat support, if not sell-off, down to about 110. But overall, that's a good strategy. And for those of you that don't know what that is, all you do is you set a certain dollar amount. You set a principal. So if you want to invest $1,000 into Riven, that's fine. What you do is you invest $100 per week over the next 10 weeks. So you still invest that $1,000, but you get a good average price for those shares. So whether it goes up or down, you're just continuing your investment. Fantastic way to invest in growth stocks, guys. And Riven, that's what I'm doing. I'm dollar cost averaging because I still think there's so much potential. I would rather be in this stock than out of it. And I'm only investing about 5% of my portfolio. So for every $100 I have invested, I'm only putting about $5 towards this, just because higher risk, higher volatility, but still so much growth, guys. So hope you guys enjoyed it. If you did, hit that like button, subscribe, and we will see you guys later. Take care.